Okay, time to get to the CEO view, and we're joined by five very special corporates on this leg of the discussion. Rajan Mittal of Bharti Enterprises joins us straight from Washington. Nanalal Kidwai as well of HSBC India and former FIIs president also joins us from Washington. Both of them are part of the Indian delegation that's travelling with the finance minister. Mukesh Aghi, president of the US-India Business Council, knows a thing or two about bilateral ties between the two countries. He also joins us from Washington, D.C. And we've got Vindi Banga, someone who understands the mood of corporate foreign investors, former board member of Unilever and currently partner at Clayton, De Beer and Rice. He joins us from London. Kiran Mazumdar-Shaw of Biocon also joins us from Bangalore. She just returned from the US yesterday. Nana, I'm going to start with you because you've been traveling with the finance minister. What's the response that his roadshow is getting from American corporates and investors?
Well, if you look at what has been a very successful couple of days in New York and now in Washington, pretty much every corporate worth its name has been in closed-door sessions, either one-on-one with the finance minister or in some of the meetings which we at FIIs have been hosting. And the response has been very, very positive because I think people really want to believe the India story. There's nervousness around it. There's nervousness around, well, will India deliver even today? But given the change in government, given the change in the politics of India, the fact that we do have a government with majority in the lower house, people do believe that there is something that's different, something that merits a relook. And some of the frustrations of dealing in the country are being given the benefit of doubt.
All right, being given the benefit of doubt, Rajan, do you get that same sense as well? Has the finance minister managed to woo the American investors, something that he set out to do in his 10-day trip?
You know, we've been with the finance minister for the last 4 days between New York and Washington. Investors have met the finance minister with their issues that they have raised, in particularly some issues which have been the past legacy that the finance minister has been very able to address, articulated that things of the past need to be resolved through a mechanism which is already put in place. But the good part is that he's assured the investors that going forward in future, no such issues will crop up. And I think the investors have felt comfortable. They've spoken to the Indian investors, the Indian delegation, which is along with the finance minister, as how things have changed since the last 1 year. So my feel is that the meetings that we've had since last 4 days, the investors are much more relaxed, comforted that this government means business, this government means to facilitate the investors coming from the US.
All right, this government means business and it has also opened the floodgates to FDI. Mukesh, what's the response that American corporations are giving to the finance minister during his US roadshow? I know he's met a whole host of people, Lloyd Blankfein, he's met GE, he's met a lot of private equity people. What is the kind of response he's getting at this stage?
I would say it's positive for a couple of reasons. One is when you look at the track record for the last 12 months, what we're seeing is government managing its budgets very well. Moody's rating moving it from stable to positive send a very right message. More important is some of the reforms on the insurance side, on the coal and mining side are going in the right direction. I think investors are looking to see that the GST and the labor reforms take place. So I think overall the sentiment is positive.
Rajan Mittal, you said that some of these foreign investors raised a few key issues in their meeting with the finance minister. What were the key issues that were raised and how were they addressed by the government? I'm guessing a lot of the talk must have been on tax.
Two issues primarily came in. One was the issues which were based on the legacy, as I said, on the taxation issues. That has been much put to rest, I have to say, the way finance minister has assured the investors that those issues will not be raised again. Second issues are really on the ease of doing business, because when the investors come in, the first thing that they look at is how quickly they can set up the shop in the country. So finance minister has also put a mechanism to say that how we are cutting the processes, making it more business friendly, investor friendly. So these were two major issues which has been addressed by the finance minister.
Kiran, you're just back from the US as well. What's the mood among American companies, American investors as far as India is concerned? Has their view really changed over the last 12 months from a lot of euphoria to a slightly more cautious, nuanced view?
You know, I think the US investors are certainly more realistic than what we are here in this country in terms of not expecting the reforms to happen at such a fast pace. But having said that, I think the message is very clear. Investors are very prepared to wait a little longer, but the words I heard being expressed over and over again was they want predictability, they want stability, and they want clarity in our policies and various reforms processes. They do not want any nasty surprises. And I think they have made it very clear that they're willing to be a bit patient, but they want to see strong reforms and they want to see stable, predictable reforms. And I think certainly measures such as the whole challenge we have on taxation and other policy issues is something they are going to watch very carefully. Finance Minister Jaitley has clearly assured them that there would be no more tax terrorism. He has basically promised them that reforms will start rolling out in the near future. And I think investors are waiting to see whether all this will happen. So I think they want us to walk the talk. Basically, they like the talk, but they want us to walk the talk.
I think you've really hit the nail on its head, so to say. They like the talk, but they now want us to walk the talk. Narendra Kidwai, you've been with the Finance Minister now. Why is it that money is still not breaking ground? Why is it that foreign investment is not really coming to India, despite all that has been said about ease of doing business, a more liberal FDI regime in the last 12 months? Even the FII flows, for that matter, have actually moderated.
So we've seen a lot of interest from large investors. If you look at some of the areas where the engagement is starting, in defense, in fact, the limits on foreign investment went up really quite recently, in insurance likewise, and there's still clarification pending, for example, in the insurance area on what is the definition of Indian management control. So as these clarifications come, and it's very important that the regulator and those that are framing these regulations and policies on the back of the policy announcements that have been made by the government do this quickly, because it's when this clarification emerges that you'll actually see the deals happen. So I think it is a question of time. These deals are very much in the making, and I have no doubt that in insurance, many of the foreign players will up their stakes. In defense, we will see deals, and in fact, in a number of new sectors where there is interest, we will continue to see fresh investment.
All right, so we'll perhaps see fresh investment comes into new sectors, scaling up of investments in the old sector. But what's really holding back corporates, Mukesh, at this stage? Why are people not scaling up investments in sectors and in companies where they're already invested?
I don't think so, because, India interest rate don't impact us. The US interest rates are, capital is cheap. I think what people are saying is let's wait and watch also on the policy side, on the taxation side, on the predictability on the what I call as the policy process side. And I think those pictures are getting more and more clear. So you will see in year 2 more investment coming through.
Kiran Mazumdar Shah, when will we see foreign investments flow in? Despite liberalized FDI regime, we've seen FDI caps raised across several sectors, and yet we haven't seen foreign money flow into the country. I'm talking about the long-term money. What's holding them back, according to you?
Like I said, I think we are still not very clear about certain policies. For instance, you talk about FDI. What about FDI in retail? I mean, we are still not clear about these policies. We have made policy decisions in terms of in the insurance sector and a few other sectors. But there are still some, uncertainties or concerns around even these policies. So I think there is a need for clear, articulate, rollout of any new policies, because I think ambiguity is what, investors are really, really concerned about. They want clarity and simple, policies that they can relate to. Because I think one of our biggest problems in India has been the ambiguity and the interpretation that is left very often to the discretion of the policymakers. And this is something that we cannot really afford anymore.
How do you explain this, Mr. Banga? We've seen FDI caps hiked in a few sectors, insurance, defense as well, and yet global companies are not really increasing their investment in India. What do you explain this?
First thing to note is that the moves that have happened so far in terms of further liberalization are not breakthrough. I mean, the insurance reform has been expected and talked about for 5, 6, 7 years. And as far as the defense reform is concerned, I still think we have to wait to see how effective it's going to be, because effectively, I'm not sure how many foreign companies are going to come and invest when they're allowed 49% equity. Are they going to bring technology or not? So I'm not sure whether the reforms that have happened thus far, the new reforms, are really breakthrough enough to bring new sectors in a big way. I think the second issue is that global companies are really concerned about the inconsistency of our tax regime, and they will wait to see clarity on that.
All right, so they will wait to see clarity on some of those things. Mukesh Aghi, what is it that you're picking up from American Inc? Do you believe the government has been able to provide enough clarity on crucial issues like taxation that have been the big bones of contention in the recent past?
I say there's an improvement in clarity. Is that enough? I would say no. The way the MAT issue was handled from the FII was a total disaster, especially I call a market perception disaster. So I think government has learned its lesson, and I think they've reacted to it. They're moving in the right direction. I think a lot of clarity has come through when the Finance Minister has met with the US IBC members here in New York, and what we're seeing is a process of providing more and more transparency towards the process of making decisions also.
That's a valid point that Mukesh and even Mr. Banga made there, that the foreign investors do not like unambiguity. They do not like anything ambiguous. They want simple, unambiguous tax laws. They want predictability. But what is really dissuading the domestic corporates back home here in India? Is it lack of confidence in the government so far? Is it overcapacity? Is just to be the devil's advocate, something that the government keeps saying, stretched balance sheets? I mean, why are they not parking with their money right now?
You know, whether it's foreign investment or Indian domestic investment, I think really it is about very poor infrastructure. I think if you really want those big buck investments in India, you have to create good, robust infrastructure. Today, I'm afraid we just don't have that. And until we get those various infrastructure projects off the ground and really start implementing strong, transportation networks, until we get our power, situation in order, I think once you get that kind of investment infrastructure in good shape, I think you will see investments pouring in.
But what about Indian companies? Rajan Mittal, you represent one of the largest conglomerates in India. Despite all this euphoria in corporate India, we haven't seen large Indian corporates get into investment mode yet. Why is that?
One is partially correct what you're saying, but Indians have started an investment, if you see, in the renewables, power sector, mining sector, and of course manufacturing. Services is playing its own role. You're seeing much more investments coming in the services side. It's taking shape. More to do also with this is the really rate of interest that we are seeing that needs to be a little more comfort zone to be brought in. Once that happens, and we have seen 3 rate cuts already taken shape by the RBI, we are all hoping that one more event of that kind could happen. So it's not that the Indian investments is not coming. It has started moving in. You can say that it is trickling in, but we will start seeing this impact probably in this year.
We'll see the impact this year, says Rajan Mittal. Nana, you, as a banker, you have a pulse on the mood of corporate India. You have an idea when they're going to really start investing. What's your sense? Why aren't large corporations investing? Why are they still in a bit of a wait-and-watch mode? Why hasn't the investment cycle revived yet?
Indian companies in investment mode is something which I believe is in the offing. One of the reasons, and the main reason why this has not happened, is Indian companies invested about 3 or 4 years ago in the belief that the Indian government would be growing at 8, or India would be growing at 8 to 10%. And that promise, of course, was not fulfilled. So capacity utilizations sit on an average at around 75%. And until capacity begins to get filled, you will not see the next cycle of investment. But creating consumer demand, creating demand from supply chains, ensuring that companies' capacities get utilized is very important. And for that, we need exports to pick up, which have been disappointing. And we need consumer demand, which we also could help with low interest rates and inflation being kept under check.
That's an important point that you raised there, consumer demand, which has taken a hit in a very long time in India. Kiran, I'm going to come to you. Do you believe the cost of credit in India is too high? And just to quote the Chief Economic Advisor, Arvind Subramanian, who said in Washington that the real interest rate is whoppingly high in India for corporates to manage their stressed balance sheets. So the question really is, should Governor Rajan relent on rates, especially since inflation seems to be largely under control?
Well, I think there is expectation on the part of corporate India to lower credit rates, but I think there is also a big concern that there are huge, debts and, non-performing assets. And I think that's where I think the banks are also stressed. And I think RBI is trying to play a balancing game between the two. And I think, I am quite optimistic that the rates will come down now that a lot of the other metrics are much more favorable towards a rate cut.
Fair point indeed. The clamour for the rate cut is only going to grow from India Inc. But of course, banks have to deal with their own NPAs. Findi Banga, do you believe the cost of credit is high in India? I know a lot of the transmission hasn't happened yet, but what's your stand really on RBI's hawkish interest reigning in policy? Should there be growth warriors instead?
Well, I think interest rates in India have begun to come down. They've come down by 50 basis points this year. My understanding is that we have not yet seen the full effect of that in lending rates as available to individual companies or consumers. And I think I would like to see that reduction in the RBI rate being reflected fully to the individual user of credit first. I think the second thing is the RBI has said that they want to balance inflation and growth, but they're also looking for measures from the government, for example, to take action on fiscal deficit and reforms. Now, fiscal deficit, I think one of the things that we'd expected the government to do, they talked about minimum governance, and privatization was supposed to be a big action. Now, we're 1 year through, the government, I think, could move to privatize some of the assets that it really should not own. And I think that could be a further stimuli for the Reserve Bank to cut rates.
Rajan Mittal, I'm sure you'd desperately like to see more sharper rate cuts. Despite the kind of cuts that we've seen in inflation, do you think the central bank has been very conservative by not cutting rates more aggressively?
We also have to understand inflation was at a high of like 11%. So RBI regulators have also to ensure that the inflations are in check. Today we see inflation is about 5%. And if you see on the consumer price index, it's even better. So I think RBI governor was in his statement said he will want to watch how the monsoons play out. While I don't think so, the monsoons are doing well. We have enough stocks. It's not that it's going to run out, but I think it's an approach which is a balanced approach. We all hope that something post the monsoons should come around.
Naina, are you going to be that diplomatic as Rajan, who seems to believe that the governor's stance has been more balanced? That's not the sense one gets while speaking to corporate India. Do you believe the central bank has been a tad too hawkish?
So the moderation in inflation is a recent phenomenon, and we have seen the central bank actually respond to that as promised in terms of cutting interest rates. What has been more disappointing is the transmission of lower interest rates not coming through the banks. Because if we can generate more consumer demand through, EMIs looking cheaper for individuals, and the money that people have in their pockets, both because inflation has come down, which RBI has been very, very hawkish on and has actually followed very closely, and as interest rates also begin to come off for the customer, you may see much more consumer demand building, which is what India needs to grow. The issue really has been as urban demand has not gone up, even while rural demand has dropped off quite steeply. And we need that balancing to come back. I think we will see rural demand again come back a bit if the monsoons are strong. We've seen the support prices being raised again, so it puts a little more money in rural hands. We've seen promise again of the rural employment scheme being again put through with a lot more features in there. And so all of this should help at the rural front, even while we look at urban demand returning as well.
All right, talking about urban demand and rural demand and cost of credit and all of that, the one big theme of this government and something that they've tom-tommed for a while now is really the Make in India, which is a pet project. Mukesh Agi, do you believe there's been an enabling environment that's been created around it? I mean, how are American companies really reading into this? Are there enough enabling policies in place for them to come here, Make in India?
Well, I think Make in India means you got to have right labor policy, you got to have right land acquisition policy. You got to have, I call, lower local interest rates. And I think government is making effort to go in that direction much more. And what we need to do is ensure that we keep on encouraging U.S. companies to keep on looking and investing more in that direction. Are we there 100%? No. But I think the direction is right.
Kiran Majumdar, I'm going to ask you a very candid question. Some of the things that are required for Make in India to be successful is uniform taxation like a GST, which many people believe will be a game changer, or even the land acquisition bill. That's really the starting point for any investments. Those have been stalled because of the political standoff. The inability for the government to draw a consensus on reforms like this, in your conversation with all those people in the United States, is that something that bothers foreign investors?
You know, I think GST is certainly something that we should push through, and I think that is something that the government is confident of pushing through. I think land reforms is required. It might take a little longer, but I don't think that's deterring the foreign investment. I really think it's really about how we go about spelling out our policies. And as I said, one of the biggest detriments to investment has been our very, very ambiguous tax regimen. And I don't think, any investor would like unpredictability in these kind of areas. I think that's something very, very real, and we have to face it head on. Also SEZs, there are a lot of low-hanging fruits. SEZs are one area where, you can actually unlock that potential. But once again, you have introduced MAT after rolling out the SEZ policy, and this government has not been able to roll it back.
Rajan Mittal, do you think the government's legislative agenda, which is just so critical, reforms like GST, the land bill, do you think it will continue to be stonewalled by the opposition, and how much of an impact could this have on the reform process?
India is a democracy, is a noisy democracy, large democracy, and in the 13 months that we have seen, government has done a commendable job in bringing the opposition parties onto the table. Insurance bill, which was stuck for 17 years, has been brought to that it's been cleared, because I think the government is talking to the opposition. We are seeing other reforms. Biggest reform that is yet to take shape is the GST, which has gone to the select committees. And I think for India, GST is very important. And we are hoping, and we will play our part as part of being Indians first and then the corporate world, to bring around people to say GST is good for India. It can add, economists say, 1 to 2% of the GDP. That's one big ticket reform which is really pending on the legislative side. Many of the other issues are executive decisions, and government has been very bold enough to do certain of the executive decisions.
I'm getting a lot of politically correct answers from our CEOs in Washington. Wendy Banga, let me throw it to you. Is there a growing realization then that big reforms like GST or the land bill for that matter, which are game changers, which is what corporate India need, will be held hostage to this political standoff? And is this inability to reach a consensus a big slip on the part of the NDA government, you think?
Well, I think, we must recognize that the government has a majority in the lower house, but not in the upper house. And you do need both to actually get purposeful legislation through. This is a reality of our constitution. Now, in this situation, these are reforms, particularly GST, which everybody is in agreement with. Because it's been on the anvil for 10 years. All parties are generally in agreement with this. I think the way to do this would be to try and create a win-win, to find compromises and keep an 80-20 situation. If you get 80% through, that's fine. We should move forward, I hope.
All right, so we've addressed the reforms that have been stalled, but let's also address the big point of concern, that's ease of doing business. The government has been talking a lot about it. It's ambitiously said that it wants to move from 142 in a list of 181 to a 50. Mukesh Aghi, has there been any improvement on the ground just yet?
I would say some. A lot needs to be done. I think ease of doing business is a lot to do with perception and definitely on the reality side. When you're ranked 140 out of 189 economies, what happens is it kind of sends a wrong message. So that's where USIBC is working with World Bank to see how we can work within the state and do state-by-state ranking and make sure the perception changes also.
All right, let's just move away for a minute from foreign investments and infrastructure and all of that. And Vindi Banga, I know you've had exposure to this. You understand the rural economy. There's been a sagging rural slowdown, and it doesn't seem to get spoken of in the same breath as the gaping infrastructure deficit or foreign investments for that matter. But it has dented demand, hasn't it?
I think the rural slowdown has definitely dented demand. I mean, you only have to look at the various FMCG companies or companies that sell tractors or agricultural products or other products to see that it's dented demand. But I think, as I said earlier, it has an effect across the whole economy. And we would be well served to take note and actually focus on immediate actions, short-term actions that can help people dependent on the agricultural economy.
Comments from our panelist Mukesh Aghi. Trade between India and US currently stands at a little over $100 billion. What are the key sectors where there's scope for bilateral trade to go up? What were the sectors that were talked about a lot in your conversation with the Finance Minister yesterday?
Well, I believe multiple sectors. When you look at, obviously on the agriculture side, we see that moving up. From an India perspective, more outsourcing, offshoring has a lot of potential. We look at the energy side, digital economy side, on the manufacturing side, and very much on the defense side, which is growing one of the fastest. So I think the scope is not about $100+ billion trade. I think we have to take it up to $500 billion in the next few years, and to me that's going to be a definition of success.
Kiran Mazumdar, I'll let you have the last word. It's been, 13 months since this government has been in office. Would you concede that its performance has fallen short of the very high expectations that corporate India had from Prime Minister Modi and from this government?
So, I think the government had set its expectations very high, and I think it realized it very quickly that it was not going to be able to roll it out at the pace at which people were expecting it. But I think, having said that, the second year is a time when they will have to basically roll out, these policies at a much faster pace, or else, then the confidence will certainly begin to wane.
Kiran Shah, Mukesh Aghi, Rajan Mittal, Naina Kidwai, and Vindi Banga, thank you so much for joining in with that leg of the discussion. That's the CEO view on the India pitch as the Finance Minister tries and hard sells the India story. How are corporates reading into all the talk? That's the view from corporates both in India and America.
Taking the discussion forward on the India pitch, we will be tracking the macro view, really looking at the big picture, and joining us, some of the biggest names there. Meghnad Desai, eminent economist, and of course, Arun Das of Trusted Sources from London, Sadanand Dhume of the American Enterprise Institute all the way from Washington, D.C., and of course, Geeta Gopinath of Harvard, who join us all right here on the India pitch. Thanks each one of you for being with us. Geeta, I'm going to begin with you. The Finance Minister is out there in the US making a hard pitch, selling the India story. Has unbridled optimism, though, that one did see when Prime Minister Modi was there, made way for more realistic, more cautious optimism, more realistic expectations this time around?
This current government came in with there was very high expectations from this current government, and some of it was, was very valid. I think what this government has managed to accomplish over the last year is to very effectively communicate its big, ambitious economic goals, to kind of effectively communicate its intent on getting things done. Where things have been less than optimal is in terms of actually implementing the big reforms, and I suspect that's maybe that's not so surprising, given given the many things that need to be changed in India. This is going to be a slow process. So I think there is a recognition now that while there is a lot of intent and there's a lot of reason to remain optimistic, things will go at a slower pace than was initially anticipated.
Arun, do you agree with Geeta there? There's definitely a reconciliation that things will move at a more gradual pace and no one really has that magic wand. Do you believe that stakeholders are now making peace with this new normal?
I would maybe say even more strongly some relative disappointment more than guarded optimism compared to the hype and the euphoria that was created by the election of Modi itself and the initial kind of hope rally, let's call it, that occurred in anticipation of his government being able to do a lot of change, implement a lot of change and reform. I think the reality, the track record so far is that, because India is not in crisis, because things have improved on a number of fronts, it's very difficult to mobilize the political will to make a lot of change because there's resistance in the upper house, there's resistance in the states to the GST, and so on and so forth. So there's I think a little bit of disappointment. I don't think we're at the point of disenchantment. I think when people take the long view, India is still going to be one of the most interesting economies and markets in the world, one of the fastest growing because of demographics and because of technological change. But more needs to happen, and a lot of it is in the power of the government if it can work with the legislature at the federal level, and if it can work with state governments as well and get things done.
Sadanand Dhume, you were with the finance minister, quizzing him as well. What has led to this change in mood? People are definitely not as ecstatic as they were a year back when this government took charge. What has changed?
Well, it's clearly not a good thing, right? I mean, you can argue that euphoria is always unnatural, but obviously, if the mood was wildly positive and now it is positive but less positive, obviously that's not a good thing. I would say a few things have contributed to it. The most important has been that the government has had 2 stabs, or depending on how you count, 1.5 stabs at presenting budgets. And these have really been cautious. The government has not come through in what many people were expecting to see. For instance, there was much talk of Big Bang reforms. There was a sense that with the best mandate that any political party had in 30 years, they would go out and do the tough things that people have always been talking about, but no one has had the courage to do. For instance, say privatize a company like Air India, which is making losses, which is one of the world's worst airlines, which is carrying far too many people on its books, always seen as something that ideally would be done, but something that no government had the political courage to do. People thought that this government would do those kinds of things, and now they realize that that will not happen. So that's one reason. And the second reason, very quickly, is that the whole MAT issue and the taxation issue, I would say unnecessary ambiguity on the whole retroactive tax question has also contributed to this recalibration of expectations, if you will.
All right, so the recalibration of expectations isn't perhaps a very good thing, is the word really coming in from Sadanand Dhume. But Meghna Desai, the Indian markets, I mean, those were the guys who were the strongest votaries of this government, trading at a Modi premium of sorts. It has seen significant correction as well. What do you attribute this to? Is this global pain that's taking a toll on Indian markets, or has the Modi premium really gotten diluted?
Well, I think markets always overreact. It's a characteristic of markets to overreact. And when the government came into power, they really were into euphoric mood. A lot of foreign money came in, thinking somehow miracles were going to be delivered in a short run. But now I think the markets realize that there is really no quick fix. These things take time. And I think the market is a much more realistic level right now than it was 3 months ago.
Arun Das, the government is trying to make an attempt to attract some of the large global investors to invest in India, and not just the EM investors who've traditionally looked at our markets. Do you believe global funds are buying the India story? They're going to take note of India? And what could be some of the reasons that they perhaps won't?
Well, I think they are certainly taking note of India, and I think they're looking at it very carefully and with a positive bias in general. I don't think that they're going to be taken in by the hype completely anymore, right? I think there's going to have to be more delivery over time because while the rest of emerging markets by and large isn't doing that well, some of it is in deep trouble, and even China is slowing down meaningfully. The developed world is not doing all that badly anymore. So I think the allocation of capital from developed to emerging markets and from large liquid developed markets or other emerging markets that are large and liquid towards India is going to require India living up to this hype rather than just continuing to market it. I think marketing it will, like I said before, will help, but it's sort of necessary, but it's not sufficient. The sufficient conditions are better policies, more reform, and eventually a higher growth rate with a lower inflation rate.
Geeta, what are the key concerns that are plaguing investors about India right now in your conversations with investors and corporates? What's the sense that you get? Why are they holding back?
Well, from an investor's perspective, the first off thing that they obviously care about is the tax environment. And there has unfortunately been a lot of mixed messages that have come out. The government is trying to communicate the line that they don't plan to have retroactive taxation, but there is still a reason for people to wait and see. So I think that would be a top concern. The second aspect is, the fact that India has been a difficult country to do business with in the past. The ease of doing business remains pretty low, and the government is trying to change that. But as an investor looking into India, there's very valid reasons to be cautious about the environment and how conducive it is to bring an investment into the country. And if you are making any kind of foreign direct investment, or if you are engaging in a project that requires acquiring land, then those, the land acquisition bill still has to clear, and those kind of big issues still remain.
Meghna Desai, let's talk about some of the specifics. The government and the finance minister is pushing for investment in the infrastructure sector. That's where we need foreign capital to come in. But, foreign investors, both short-term and long-term, are not interested in this sector right now due to lock-in clauses and credit risk that's associated, plus the whole policy uncertainty in this space. India needs infra money desperately. What's the way out then?
Well, I think right now there has been a delay in infrastructure investment because the logjam inherited from the past has not yet been sorted out. Banks are still in a somewhat fragile position with a lot of non-performing assets. This is again a matter of time, and it will be resolved. And I think in the last budget, the FM did propose very interesting policy for financing infrastructure by setting up a special fund. And I think it will catch on. Again, all these are short-run pains, and they'll be overcome, and India will bounce up and get into 9% growth rate.
All right, so some legacy issues there, but Arnab Das, the government is desperate to bridge that gaping infra deficit, but investors find investing in the sector obviously fraught with risks for the reasons that we've already spoken about. How does one really then address the crying need for funds in infrastructure, which is perhaps the starting point for any sort of economic revival?
Well, I think addressing all of those issues would help a lot. Addressing the policy uncertainty, addressing the tax uncertainty. I think, at the end of the day, right, the whole thing about infrastructure is a bit of a chicken and egg question. The experience of many countries is it's unclear whether infrastructure leads growth or follows growth. It's probably a bit of both, right? So if there's an autonomous increase in the growth rate because the country has done a lot of reform and has the appropriate demographics and the appropriate enabling environment to adopt better technology, newer technology, increase efficiency, has a liberal labor market, and so on, people will see that there are opportunities to invest as direct investors in the corporate sector or the financial sector or what have you, or the agricultural sector for that matter, And then others will come in and say, okay, well, all of these good things that are happening require more infrastructure, more transport, more logistics, more utilities, more more internet, broadband, cellular, you name it, right? All the things that are infrastructure, quasi-infrastructure, and those things will start to happen whether or not the government is engaged in some sort of public-private partnership. People will come in and they'll do what's necessary because the opportunity is there, and I think that's the logjam here is not that the government needs to say that it wants infrastructure investment. I think everybody understands that the infrastructure in India is a constraint on growth, and that if only there were more investment in infrastructure, the growth rate should pick up. I think what needs to be done is to create the enabling environment, not just for infrastructure, but all kinds of other investment and all kinds of other growth and consumption. And then, once the evidence starts to pour in that unlike other places in the world, almost every place else is experiencing a slower growth rate. India would experience a rising growth rate, and it would become a magnet for all kinds of investment. And that, I think, the potential there is enormous in infrastructure and other sectors because, after all, there are well over 1 billion people, and the population is young, and the population is growing fast, and the population has aspirations. So all the ingredients are there. It just needs the political system to shift, change its ways, change the gears of the economy, and all of these things will happen.
Professor Desai, if you actually look at the macro picture, our twin deficits are under control. There is low foreign debt to GDP versus, of course, the other emerging markets. We have a reasonably strong, stable currency. One is tempted to believe India is a sweet spot, but the ratings agencies don't seem to be too impressed. They haven't upgraded India. The question is, what will it take for them to do so?
Well, again, rating agencies are not the most reliable people in the whole world. India has laid down the path of deficit reduction. And I think if the capital divestment program of raising resources by selling bits of nationalized industry is as successful as it has been so far, the debt problem will be controlled. I think Arun Jaitley knows this, and he will control the debt problem. I have no doubt about that.
What's your view, Sadanand? The macros definitely seem to be on the mend. They're much better than what they were a year back. Both the IMF and the World Bank believe India is a bright spot in the global economy. Why are ratings agencies not convinced just yet then?
Well, I think in many ways they're two separate questions. I think it's true that on the macroeconomy, they've done a good job. I mean, just go back to, the end of 2012, 2013, summer of 2013. I mean, things look pretty dire. It's true that they've stabilized the economy. It's true that inflation is under control, the fiscal deficit is under control, foreign exchange reserves look healthy. Let's give them credit where credit is due. But stabilizing the macroeconomy and reigniting investor interest are two different things. So you could say that stabilizing the macroeconomy is a necessary but not sufficient condition for reigniting investor interest. Where they have been a little bit slower is in putting out the message that this is a dramatically different government that is going to do things that the previous government could not have imagined doing. And the comparison I like to make, because I also look at foreign policy quite closely, I like to compare the caution of economic policy with the boldness in foreign policy, right? Where is the economic equivalent of the decision to invite Barack Obama to be the Republic Day chief guest? That's the kind of thing I want to see. Not something completely wild. No one is saying that, you have to sort of do something that is, completely unthinkable. For instance, scrap the entire public sector. No reasonable persons ask that. But where is the boldness and the flair that one would expect from a government with a single party that has 282 seats? Clearly, they've chosen caution. They defend that quite well, as you saw today at AEI. It's still something that I think some people would be convinced by their argument. It's not something that convinces me, unfortunately.
Arnab, macros are looking good thanks to the crash in crude prices. That's one of the factors that's definitely contributed to the relative improvement in the macroeconomic picture. Have we leveraged that enough? Because prices will only head north from here on over the next 12-month periods, and that might, cut down the window for the government to push through some key reforms.
Well, it is clear that crude oil has bounced off the bottom, but I think it's also clear that we're not going back to the highs of the commodity super cycle. So I think there's still time for India to, quote unquote, leverage on the fall in the price of oil. But what needs to be done to make that a sustainable process and a sustainable trajectory for the economy is not just to start importing more oil at a lower price, but to clean up some of the issues from the excesses of the past 5 years and some of the structural issues that have been there for much longer, right? So in particular, the real constraint is one important constraint among many others is infrastructure and credit. And the financial system needs to be cleaned up. The NPLs need to be dealt with, and a new credit process, but a more sustainable credit creation process to finance investment that's going to lead to a higher potential growth rate. That's what's required. That's what both macro investors and equity investors are going to be looking for in the coming years. And that would help to keep India in that shining sweet spot that so many people talk about so glowingly.
All right, so we've spoken about one part of what has really contributed to those macros on the mend. But Geeta, the world certainly believes that India has been able to clean up its books. There is concurrence on greater fiscal prudence as well. Have we made good use of factors that have contributed to the stable macro environment? And I'm just going to name crude as one of those.
There are a few things that can change. Like you mentioned, that the fact that the fiscal situation is in order can be also attributed in important ways to commodity prices and that they've come down. So that's been a big plus. So if that does get reversed, which I don't expect that happening in a big way in the next couple of years. So India does have that kind of fiscal bonus coming from low commodity prices. I think what's clear is that there's been a lot of communication again here, both from the finance ministry, and it is coming even from the previous governments, that it's important to keep the fiscal house in order. Now, I hope that remains, and there is the more number of years you can signal that you are trying to do your best to keep the fiscal house in order. It instills more faith in global investors. And so, so I think there is a sense that the Indian economy's macro fundamentals are on a stable, sound footing, at least for the near term. How that can change in the future will change depending upon the personalities in charge of these kinds of decisions.
So let's talk about the central bank in India then. The RBI in its commentary has been rather hawkish and rather alarmist as far as inflationary pressures in the economy are concerned. Meghna Desai, do you believe there is a disconnect between what the central bank is trying to do, which is really rein in inflation even at these levels, and the government that's all out to chase growth? Should the governor throw his weight behind what the government wants to do and relent on rates?
Well, I think, the central bank governor, Dr. Raghuram Rajan, has to do the job he has to do, which is to fight inflation. And he is a very cautious man, as a central banker ought to be, and he is not yet convinced that inflation has gone out of the system. And I agree with him. We have, especially with the monsoon being so uncertain, we have to be very careful and have a tight control on interest rates. Interest rates will come down, but it will take a long time to come down.
Geeta Gopinath, what's your view on Governor Rajan's policy? He insists that he isn't a cheerleader for the economy, and yet there is a clamour for him to turn a growth warrior from being an inflation hawk. Given the circumstances, should he now push growth more aggressively?
I'm pretty sure that Dr. Rajan cares as much about growth as he cares about inflation. So I don't see that as a disconnect between the two. I mean, the government is pushing for growth. Dr. Rajan is fully behind that. And there are many ways to bring about growth, which does not bring in inflation at the same time. In fact, it's very important that that's the kind of growth that India achieves. Through productivity improvements, for which India, there's a huge amount of scope for that. Growth has to come about. So it's very important to make sure that inflation that has been brought down very effectively, is kept under control. And the RBI is doing a terrific job with that. Dr. Rajan has been very clear that he makes his decision based on the numbers that come in for the economy, and he has more information than you and I do in this matter. Also, in terms of projecting ahead, it's very important. Now, you must remember that interest rate policy works very slowly through the economy, and it works with lags. So if you are concerned about an inflationary environment in the next year, it's important for monetary policy to react now in anticipation of that. And so, I'm completely comfortable with leaving those decisions to the RBI and to Dr. Rajan. And I believe he has both growth and inflation control in, he would want to have a high level of growth in the Indian economy while keeping inflation at a low level.
Arnab, how do you read the RBI commentary? It's not just the action, but also the commentary, which has been pretty hawkish and alarmist. Some would say he's raised a red flag and inflationary concerns that still exist. Realistically speaking, after that kind of commentary, is there a possibility of him turning a dove from here on? Could we see sharp rate cuts through the course of this year?
Well, I think that there is a structural problem of inflation because of bottlenecks in the economy, because the economy is still very sensitive to agricultural issues, including the monsoon. And so inflation expectations can quite easily become quite problematic in the case of India, as many other emerging market countries, because of what might otherwise be transitory shocks, such as a bad monsoon. I think in general, Rajan and the changes in the Reserve Bank was a very good institution to begin with. But I think, bringing in Rajan and the changes that he's implemented in the operational framework and the style of communication, these are important sea changes and very positive sea changes in the story in India. And I think that that's had a huge impact in making the macro story much more reliable in the case of India, especially compared to many other countries which had adopted in emerging markets that compete for capital with India. Many others, Brazil, Turkey, South Africa, etc., had implemented inflation targeting when it was the thing to do, and India had not. And it looked like in many of those cases, the inflation targeting regime was robust and had been institutionalized. But it turned out that that was not the case, and subsequent governments were able to undermine the inflation targeting regime. So I think if India is to avoid that pitfall, then the central bank needs to establish its beachhead in the market and in the economy and in the political system. And I think that's just what Rajan is doing, and it's a very good thing. There is a bit of a disconnect, but that's not such a bad idea. The government should be doing things to talk up growth. It should be doing things more pertinently to raise the potential growth rate. And that would allow for lower real interest rates. If the economy were more flexible, if the labor market were more liberalized, if the land market were more liberalized, if the infrastructure process were open, if there could be free trade among the Indian states, the growth rate would be a lot higher. The potential growth rate, the actual growth rate, and the inflationary threat would be a lot lower. And so there would be a consistency, if you like, in the independent rancorousness of what the central bank might seem to be saying and the government's objectives, as in many other countries, but not all of them. So I think there's a lot that could be done, and unfortunately only some of it is being done. So I think India will still continue to fall short of its potential.
All right, so let's just take the discussion away from Dr. Rajan and what he's going to do on monetary policy. Sadanand Dume, the political logjam that one has seen on economic decisions, especially the parliamentary standoff, do you concede at one level mandate 2014, where BJP romped to office with 282 seats, was perhaps misread?
It was misread to the extent that people who were overly optimistic about what it meant for reform have been proven wrong. I don't think it's been misread in terms of how historic a mandate it was. I would argue that the government has chosen to be cautious. I would also argue that they've chosen wrongly to be cautious. They could have been bolder. I wish they had been bolder. And I think a bolder path of action would have been more in keeping with the nature of the mandate.
Geeta Gopinath, the political logjam, like I was talking to Sadanand Dume about, has undoubtedly taken a toll on decision making. Rajya Sabha seems to be a ground only for obstruction, and that's also the view within the government. So did people mount too much expectation based on that overwhelming majority that the BJP did get? Did elections 2014 misrepresent what the government could have done in the next 5 years?
Indeed, the strength in the Lok Sabha was viewed as giving a mandate to make major reforms happen very quickly. So there might have been some misreading of that. At the same time, though, it was a very strong mandate handed down to a government after many years to come in as a clear majority. So, so that was not completely misplaced. But yes, so things are moving much more slowly in the Rajya Sabha. And, these are big issues, like the land reform bill is a big issue. So there must be, I think there is now a little more of a realization that this process is not going to move at the pace that one might have hoped for. But at the same time, as long as all hands are on deck, I think this is, it's a positive sign.
To me, comment on that. Is there a growing realization that big reforms like GST or the land bill, which are game changers, so to say, that they will be held hostage to this political standoff, this politics of obstructionism, and will politics take more precedence as well going forward? What's your view?
I think, politics always plays a role in any democracy. And of course, India is not unique in this regard. I think on some of the things that are already in the pipeline, in fact, there is quite a lot of optimism. I personally am quite optimistic about GST. I think they have done a lot of spade work over there, and they will roll out a GST. Will it be the perfect GST? Maybe not, but will it still be good and a step forward? Yes. On land, I think there's a bigger question mark. May happen, may not happen. But I think the problem broadly is less about their ability to push through what they have proposed. The problem is more about what they have not proposed. Why haven't they proposed more is the question I would ask.
Meghna Desai, who should be blamed for this? Obviously, the opposition is doing its job, which is trying to block critical legislative business of this government. But is the government equally at fault for its inability to reach a consensus with the opposition, reaching out to them on issues like GST and land bill?
See, the government is a new government. It is learning how to deal with parliamentary opposition. Eventually, although there is opposition, bills do pass. This was the experience of Congress when it was in power. While BJP opposed it, bills got passed. I think one has to separate the noise from the signal. There's a lot of noise, but that doesn't mean the signals are wrong. All these bills will be passed. There's no doubt about that.
All right, Sadanand Dume, I'm going to bring this to you because we're talking about politics of obstructionism, and do you believe the government should instead take on the opposition head on? They are people with 282 seats and they're being obstructed by a party that has been reduced to 44 in the Lok Sabha. What explains the equations that exist? Should the government be far bolder, take them on?
I think it's just, it comes down to how this government reads politics. And it seems to me that they feel that they can consolidate and hold on to power best by not taking unnecessary risks or picking unnecessary fights. Who is to say? Perhaps they're right. My own view is that it is quite the opposite. I think that they should have picked fights. I think that they should have gone out there and broken old paradigms. I don't think that they should have. I'm not looking for something completely maximalist, but just some more imagination and boldness of the sort that we had seen, for instance, in foreign policy. Now, it's quite possible that we're still going to see this in the second year or the third year and so on. And you have to remember that, this whole Western way of looking at it, of which I'm also guilty, which is that, we want to see everything done in the first 3 months or the first 100 days of the first year, is simply, historically speaking, not the Indian model. The Vijay government did diddly squat with its first 2 years, but it ended up being quite a reformist government. So I think there's still hope that they're going to do big things, but it's certainly the case that they have gone about it quite cautiously so far.
Geeta Gopinath, we understand the constraints that a democratic system puts on decision making, and so it seems that the bitter economic medicine, which is what we need, tough decisions, they were all polled rhetoric, and in reality, populist decisions will be taken to accommodate political compulsions. Do you see that happening? We've seen a bit of an instance with the MSP hike as well now.
First of all, I don't, the word free market seems to suggest that this is one of those, we will simply let the market do whatever it wants to do. I don't think there is, I don't think we live in a world where we like to think that can be taken to its limit. There are many important policies that need to be done. There are many issues in terms of the ease of doing business, in terms of privatizing certain sectors. All of these have to be undertaken, but it will run into political constraints. And so in the case of India, it will move at a slower pace than it might in another country where things are more autocratic. But at the same, but there are virtues to the political process, and there are inputs that get into it. I would just say that this particular government, I have some optimism, has the ability to push through the important reforms in hopefully the right way. And so, again, I think what I would mainly say is that things are going to be slower than one would hope. And let me just bring in another issue here, which is, I feel, getting less attention, which is on education reform. That is a hugely important issue for India. If we want to have sustainable growth for a long period of time, the health and the education sector needs a lot of attention. And I'm afraid that those are not getting the attention that they deserve.
Meghna Desai, how do you read into the government's move to hike MSP at a time when there is a fair amount of distress in the rural economy? Is there a move the government to be more populist? Sadanand, before we get to Meghna Desai, Sadanand Dume, how do you read into this? Is this a populist move?
No, I'm not sure if that's an entirely fair comparison. I think that in terms of populism, this government is certainly a dramatic improvement over the UPA. Even if you look at their social schemes like Jan Dhan Yojana and insurance and so on, what they are saying is, yes, the government has a role in helping the poor. I think that's perfectly okay personally. But they also expect a certain amount of responsibility, a certain amount of buy-in by the people who are helped. So I think that you do see a philosophical difference. I think that's an important difference. And I think that in general, this government is on the right side. So I don't fault them for being too populist. They have certainly halted the kind of naked populism, the kind of populism without responsibility that was the hallmark of UPA. So on that front, I actually give them high marks. Where I don't give them such high marks is in terms of going ahead and making painful decisions that will have long-term benefits. That's what I'd like to see more of.
All right, I'm going to, for 2 minutes, keep every economic decision at bay and talk pure politics. Meghna Desai, the first instance of crony capitalism, or at least charges of it, have hit the government. The whole Sushma Swaraj and the Lalit Modi controversy. Are you surprised it's happening so early in the government's tenure, and does it really tarnish Prime Minister Modi's own image?
Well, I think the Sushma Swaraj problem is much smaller than people have made it out. Her action as a Minister for External Affairs in requesting the British High Commissioner to let Lalit Modi have the visa to go out, all she had to say was India had no objection. And that's all she did. What Lalit Modi is, what Lalit Modi has done are not germane to the problem of Sushma Swaraj doing her duty. The only question is, was there a conflict of interest? And that's a question which the Prime Minister will have to sort out. But I believe that there was no conflict of interest.
I don't agree with you, Meghna, this time. You say it's a small issue, but let Sadanand Dume have the last word on this controversy. In the last 1 week, you've had the first instance of crony capitalism hit the government. Are you surprised that this is, has happened so early in the tenure of this government, given all the rhetoric that we've seen of transparency and no crony capitalism and no corruption as well? Are you surprised that it's happened so early in this government's tenure?
No, I'm not surprised at all. I think this says more about the changing nature of the Indian media. I mean, it's like the volume button is always on 10. Now, no reasonable person would deny that there is an element of impropriety in the foreign minister's dealings with Mr. Lalit Modi. But I don't think any sensible person can actually equate that with the kind of scams that we saw, which in fact cost the exchequer tens of billions of dollars. It's not for me to judge the media. I suppose it is what it is. But I think that it's certainly true that effectively, regardless of what nuances you or I may decide to focus on, it's certainly true that they've been hurt by this, and this is a scandal. But I think that in a political economy like India, it would be naive to expect that nothing at all would come up. Something has come up. I think frankly that something is not as big a deal as it's being made out. I'm not saying it's good. I'm not saying that that there is no impropriety. I think the effect has probably been exaggerated, but that's just the culture that people live in, and the BJP should have been expecting that. And I think it was a real mistake to go to town after 1 year and say, look at us, we're so different, we haven't had any scams, because in many ways that was like, putting up a balloon that the media was just dying to puncture, and now they punctured it.
So that balloon has been punctured. I disagree with you. I think Caesar's wife needs to be above suspicion, and so matters of propriety can't really be brushed aside. But we're completely running out of time here because we've got something really special lined up for you. The man of the moment, the Finance Minister Arun Jaitley himself, who joins us all the way from the United States. Thanks very much, sir, for taking time out and speaking to us right here at ET Now. You've been crisscrossing US, if I may, from the east to the west coast. What kind of responses have you been getting through these meetings with all the foreign investors and the Fortune 500 CEOs who you've met so far, sir?
Well, I've had a very large number of engagements with different people in government here, particularly with the investors, and I think the response is hugely encouraging. There's a lot of buzz about India. India stands out as a bright spot in the global economy today, and most people feel that the current indications are, if at all, it's going to improve. And therefore, India becomes a natural recipient of a lot of attention and consequently a lot of investment.
Jaitley, I understand you're running a really busy schedule today in Frisco, but very quickly, have you been able to convince foreign investors on key issues like MAT and even GST, whose rollout may well be delayed again? These are key concerns that everyone's telling us over the course of the last 2 hours.
Well, people want GST to be implemented quickly because it's a hassle-free mode of taxation, and it gives a great fillip to the economy. Taxation is one area where over the last several years India had earned a bad name by an ultra-aggressive policy on taxation. And now there is a realization both within, and it is part of my job to convey it to the body of investors, that India's taxation system is going to be non-adversarial. And we've been smoothing a lot of areas up. I think it's still work in progress as far as those areas are concerned. And hopefully this message is going through with the body of investors.
Your chief economic advisor, Arvind Subramanian, who's been traveling with you, has actually gone and said there in Washington that the real rate of interest in India is still whoppingly high, and I'm quoting him there. And yet, of course, the central bank, RBI, has been rather hawkish in its commentary, sir. Do you believe Governor Rajan could have been a little less negative, a little less alarmist, perhaps? And it's also time for him to aggressively cut rates, maybe more frequently than you would want him to?
Well, people do expect interest rates to moderate down further, so do I. And I'm sure with inflation under control, the RBI as a very responsible institution will apply itself to it.
Well, Mr. Jaitley, while we don't know how the RBI is going to move on the rates, what we do know is that the Fed is going to move on rates as well and hike them over the course of this year, maybe towards the latter part of this year. How much of an impact is that going to have on our markets and our economy, according to you, and how prepared are we?
Well, we'll wait for the decision when it comes. Obviously, if there is a monetary easing in the United States, it will impact on the whole world. And I can't say that India will remain unaffected by it. But our preparedness and our strength of our economy to face such a situation is far stronger now.
I know you're in a rush and I'm not going to hold you back because I know you're there on work. Some analysts do believe, and this is my last question to you, I can assure you, some analysts do believe that the decision to hike MSP that you recently did perhaps borders on populism, and that's beginning to worry markets and investors. How will you allay fears here, and how should markets really read into this decision?
Well, it's the most correct decision. There is an agrarian distress which has taken place because of bad weather conditions last year, and therefore rural income increase had slowed down. This is one methodology of putting more money into the rural areas, and I think it's a highly progressive decision.
Mr. Jaitley, thank you so much for taking time out and doing that quick interaction with us right here on India Pitch, making this show really special. Our 3-hour coverage of your visit to the United States, crisscrossing 4 cities across that nation. Thank you so much for joining us right here on the India Pitch on ET Now. Supriya?
Finance Minister's interview is really the icing on the cake. He takes time out to speak to the channel that matters and the views that count right here. Thanks very much each one of you for being with us in this 3-hour special programming as we sit here and analyze the Finance Minister's visit as he makes that big pitch for India. Will investors buy his talk is really something we'll have to wait and watch.
Yes, evidence will be seen over the next 6 to 12 months as more money potentially comes into India. A lot of talk has happened. It's now time for the government to walk the talk as well. Thanks for watching this special telecast, the India Pitch 3-hour programming right here on ET Now. News and updates continue on India's #1 business news channel.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.